Hello traders, welcome back to Nova channel and let's continue another new topic today. In today's video, I will introduce to you the session flow and news delay, how the market really moves for scalpers. Let's get started. Many traders believe that price moves because of news. They watch economic calendars closely, wait for headlines, and expect for the market to react instantly once the data is released. Yet in real trading, especially for gold and major forex pairs, the market often moves before, after, or even against the news. For experienced scalpers, understanding session flow and news delay is far more important than reacting to headlines. These two concepts explain why the price behaves differently during Asian, London, and New York session, and why the real move often comes when most traders are already late. The financial market is not controlled by the same participants all day long. Each trading session brings a different group of players with different objectives and liquidity needs. During the Asian session, price often moves slowly. Liquidity is relatively thin, especially for gold and non-JPY forex pairs. Institutions use this time to balance positions, not to push strong directional trends. For scalpers, this is the phase where the fall breakouts and range trading dominate. As London opens, volume increases sharply. European banks and funds enter the market, and price often creates an initial move that looks like a breakout. However, this move is frequently a liquidity prop, designed to trigger stops from traders who position themselves during Asia. The most decisive movements usually happened in the New York session, particularly when it overlapped with London. This is when U.S. institutions, bond traders, and macro funds step in. If the price respects or rejects key levels during this window, they often reveals the market's true intention for the day. For scalpers, ignoring session flow is a fatal mistake. Entering aggressively during low liquidity hours or confusing a London fake move for a real trend is one of the fastest ways to get stopped out repeatedly. Moreover, most retail traders assume that the movement news is released. Price should immediately reflect that information. In reality, markets are forward-looking, and large players often position themselves well before the data becomes public. This leads to the concept of news delay. Instead of reacting instantly, price may pause move in the opposition direction or spike violently in both directions. These movements are not random. They occur because institutional traders use the news event to execute large orders using retail volatility as liquidity. In many cases, the market has already priced in the data. When retail traders rush to buy or sell based on the headline, the market instead reverses or consolidates as smart money finishes their positioning. For gold scalpers, this behavior is especially common around CPI, non-farm payroll, and FOMC days. The strongest and cleanest moves often appear 10 to 30 minutes after the news, once emotion-driven orders have been absorbed. Besides, the session flows and news delay are not separate concepts. They reinforce each other. A classic example is when a major U.S. news event is released during the New York session. Price may spike violently on the announcement, sweeping stocks on both sides. Then, once volatility settles, the market aligns with dominant session bias and continues in a clear direction. Scalpers who chase the first candle usually lose. Scalpers who understand the session flow wait for the post-news structure to form, then trade in alignment with the session controlling liquidity. This is why professional traders often say the first move is the trap, the second move is the opportunity. In conclusion, session flow and news delay explain why markets often feel deceptive to inexperienced traders. Price does not move simply because news is good or bad. And this is does not respect technical levels equally throughout the day. For scalpers, real consistency comes from knowing who is active when they are active and how price behaves around high-impact events. By aligning trades with dominant sessions and waiting for both news clarity, Traders stop reacting emotionally and begin trading with structure. Markets reward patience, not speed, and those who understand session flow and news delay stop chasing candles and start trading alongside the market instead of against it. And that is the topic today. Thank you for your watching, and don't forget to subscribe Nova Scalper to receive more useful video for your trading journey. Happy trading and see you in the next video.